On the verge of a 100-year sovereign debt bubble bursting, we have the currency needing to be reset. The system is broken. We are facing unprecedented inflation. We're being gaslit by our own government telling us that money printing is not the cause of this. We're witnessing the power balance of the entire world shifting from the west to the east. We have commodities like gold, oil, wheat shooting higher. And fiat currencies are also going higher. What in the heck is going on? And more importantly, what is going to happen? Well, I'm joined by a guest, Lawrence Lepard, who is going to talk us through this exact thing. He is a sound money advocate. He's an equity fund manager who spends all his time focusing on these exact topics. We're going to dig into that. We're going to talk about gold. We're going to talk about silver. We're going to talk about oil. We're going to talk about Bitcoin. We're going to talk about Bretton Woods 1, 2, and 3. And we're even going to get into maybe what's going to happen in the future. We have a lot to discuss. Now, I want to say Lawrence is going to be speaking at the new Market Disruptors live event coming up in a couple months. There's a link down below. He is going to let us know two questions. One, what does he think going to happen over the next couple of years? And two, what is the roadmap to survive? There's a lot of doom and gloom that we talk about in this interview, but there is massive hope on the other side. And so it's about staying alive and prospering through this time period. So check it out. There's a link down below, Market Disruptors Live 2022. And let's go ahead and jump into the interview with Lawrence right now. Hey, Lawrence, welcome back for another chance to talk here. I'm so excited to dig in with you. I got so much to discuss. So welcome back.
Yeah, likewise, Mark. I always enjoy talking to you. There's a lot going on, right?
Man, there's a lot going on. We were talking about before we started recording how sometimes there's not a lot to talk about, but now it's like almost like every day there's like things to talk about. So it's like pretty exciting. Oh, yeah. So I know you're a sound money advocate. I became a gold bug after 2008. Then I kind of got into Bitcoin I got into Bitcoin in 2015, and now I found out that I'm also a sound money advocate like yourself. Yeah. What is a sound money advocate?
Oh gosh, I mean it's somebody who believes that the monetary system should not be controlled by the government, that it should be outside of the government. That there should be a neutral, fair system for money should be something that's neutral, not government driven. Fiat by definition, the word means by decree, and by government decree, we've got fiat money. They take $1, they print it for 2 cents. They tell us it's worth $1 because they say so. Gold has intrinsic value. Bitcoin has intrinsic value because it's a limited size, immutable ledger. So the two most obvious forms of sound money in the world today, as you know, are gold and Bitcoin. Well, silver too, but gold is the bigger one of the two. So it's people who believe. It's people who believe that money should not be printed. Really, I think that's the biggest thing that defines a sound money guy.
So sound money being money that can't just be artificially inflated or created arbitrarily out of thin air, and then an advocate meaning that we believe in it. You mentioned Bitcoin. You can't create more of it. Gold can't really create more of it, which you kind of can. We'll talk about that.
You can create a little, but not much.
Yeah. And then you mentioned silver. Now, when it comes to gold and silver, silver was demonetized, right, in the late 1800s. And so, like when the government seized gold back in 1933, it seized gold as money, but it didn't seize silver because silver really isn't money anymore. Is that correct?
That's correct. It isn't. It isn't. It's kind of it's a hybrid. So. I like Dan Oliver's description of all this, that gold is the senior money in precious metals world before Bitcoin existed. Of course, before 2008, that was a lot of time. Gold was the senior money that you did capital transactions with, and silver was the everyday man's money because, gold was quite valuable and scarce, and there's a lot more silver. It's about 15-to-1 amount of silver to gold. So people were paying for things with silver more often than with gold. You do big transactions with gold, small with silver. And in the Depression, the 30s, silver didn't do particularly well. And that's because the dollar was backed by gold. And so people could actually trade the dollar for everyday money. So they didn't need silver.
Right.
But yeah, silver was demonetized. The Chinese and the Indians very unintelligently bet on silver in the 1800s and early 1900s, and we completely demonetized it. Yeah. So silver is one of those hybrids. The thing that's positive about silver is that it's actually an industrial metal with a lot of uses, and they're growing. You look at electric cars, you look at solar panels, et cetera. there are many needs. There's a lot of uses for silver. So there's a demand component there.
But with silver, I think it's like with silver, it's like 80% of the demand is from industrial use, I believe. Whereas
I think it may be a tad lower. It could be that high. I don't know. It's something between 60 and 80% that's used in everyday stuff. I mean, that's roughly accurate.
Yeah. Whereas gold's most of its premium is because of a monetary metal, so it's a monetary.
Pretty
premium.
much. I mean that, or the fact that women like it as jewelry. I mean, about half the gold in the world is suitable to be put around a woman's neck. I mean, India is a very wealthy country. If gold becomes, the de facto monetary standard, there are going to be a lot of rich Indian housewives.
Yeah. I want to get more in. We'll probably get more back into gold in a little bit. But before that, I want to set things up a little bit. Here we are at the time of this recording. We are dealing with a war, I guess, Russia-Ukraine war, sanctions like we've never seen before. Commodities are spiking like crazy. Inflation just won't go away. We just printed a 7.9% CPI. And it's all Russia's fault.
Yeah, kind of hard to believe, right? I mean, how long ago did the war start? What was it, 2-3 weeks ago?
Right.
All these conditions precedent were there long before Russia did what they did. I do think the Russian move will be an accelerant of what's going on, or what was going on anyway. I've written about this, talked about it on Twitter. My belief is that Putin really was less concerned about the security of the Ukraine and are putting missiles there, and that this move is actually all about a challenge to the dollar as the world's reserve currency. I mean, to me, what's going on here is Putin is doing what Charles de Gaulle did in the 60s when he said, you Americans have an exorbitant privilege. You are printing money and using it to buy stuff. Mm-hmm. And, we send you our wine and we send you the things that have value, and you send us these pieces of paper that you're printing to excess. And so, we'll pass on the paper. Please send us some gold.
Right.
So they started doing that. And of course, eventually Nixon said, hang on a second, our gold supplies have gone from 260,000 ounces to, we've lost half our gold. We went, I don't know, from 20,000 tons to 8,000 tons. We got to put a stop to this. So we shut the gold window.
Right.
So to me, Putin has got, he's got a country that's really not much of an economy from a production standpoint. It's not like China, but it is loaded with natural resources.
Right.
I think he reached the point where he said, I'm tired of selling these resources for these paper dollars that are depreciating in value. Although he's already taken that step, because in a way, he's been very carefully and consistently converting what he's sold from dollars into gold, and his gold reserves have gone up substantially. So my view is he's making a bet that when the currency reset occurs, I think you and I, many people listening to this would all agree that the currency system is broken and that a reset will have to occur. The last one occurred in the 1920s and 30s. So it's 100 years later. And, he's making the bet that when that happens, gold will be an important part of it.
Yeah. I had a chart on a previous video showing the amount of de-dollarization that Russia has done, and their amount of dollars has just completely plunged. And at the same time, the amount of gold they've had has gone up in equal or even a greater proportion. And so it's almost like he's been preparing for this. I talk about the sanctions. It's like, if I kick everybody out of the party, eventually I'm the only one left at the party. I have no control over the people I kicked out. And that's kind of what the sanctions are, right? We keep kicking people out of the financial system, and eventually nobody's left in the financial system.
Well, that's right. I mean, doing this, the sanctions we placed on them, we think that they're going to hurt them, and to some extent they probably will. However, they're also going to hurt if we've got a dollar that's no longer safe. I mean, the fact that we grabbed his foreign currency reserves, I mean, that was just an enormously important signpost of what's going on here. And, we're going to hurt the dollar's reserve currency status, because every other country in the world is now sitting there. If they have, foreign currency reserves held with us or in the Western banking system, they're likely to say, if we piss the US off, they can grab our money, grab our wealth. I mean, that was like the biggest advertisement for gold and Bitcoin, money that's outside of the system that you could imagine. I mean, I think we shot ourselves in the foot. I mean, we think we're hurting them, but in reality, we're actually hurting the dollar's reserve currency status.
Yeah. So just just talking about the dollar's reserve status, I mean, I think first off, it was Canada, right, with the truckers and
right. Well, there was that first, right.
And that showed that nobody's money is safe. The government can just take it anytime they want. But it was still kind of like, well, that's for more like businesses and for people. And so just when that was thrust onto the world stage and people were realizing that, then all of a sudden we saw not even one of three global superpowers with nukes can't even keep their money safe.
Right, exactly. And every other country in the world is aware of that. I mean, India, Saudi, I mean, every country is aware of it. And this is why, I think intelligent countries, if you look at the data, intelligent countries have been buying gold and they've been repatriating their gold because unfortunately, when you get into one of these messy situations like we're in now, a fourth turning, the rule of law becomes somewhat optional. And, we're in a war and we think that we're justified in doing this. Fine. But this, what I see happening is kind of possession becomes 9/10, right?
Yeah.
If you look at historically, I mean, Germany, there've been a lot of countries who were storing their gold in the US and they've asked for it back, and not surprising, right?
Well, and people have to wonder, I mean, at least smart people, like you said, a lot of these intelligent countries out there, they have to realize that even though they may not be on the receiving end of those sanctions this time, they easily could be in the future.
Well, that's the point. That's the point. I mean, what terrifies me about this more than anything else is that the US used to stand for the rule of law and a government of laws, not men. And, and Canada too. And for governments, when they start to get desperate, I mean, the Canadian thing just shocked me and was really chilling. I mean, it was really Orwellian. You support a protest and we can freeze your money. I mean, really? No due process, no courts, no law, I mean, it blew my mind. I mean, and that it tells me, and it's not surprising to me, and I've said this for some time to Bitcoiners and other people, I actually saw another data point of it, the nickel thing, right? So nickel does a GameStop and they change the rules. And so this is what governments do. The reason we need the system to fail, and the reason I'm rooting for it to fail, as sad as that will be and the pain it will cause, is because it's so broken. And these governments, when things go against them, it's like somebody on Twitter said it, the house doesn't like to lose. And they change the rules, right?
I want to dig into that for a second because it's so important. I've talked a lot about this. I mean, the Constitution was a rule of law, and now, to your point, we're ruled by men who arbitrarily change the rules. So back to the trucker thing, people that donated. So at the time, the Canadians had a right to peaceful protest and assemble. So that was rightfully so, and people could donate to that. Rightfully so. But then after that was done, they changed the rules back and said, no, now what you did was illegal, even though it was legal at the time. So it's like arbitrarily changing the rules. And then to dig in a little bit back to the Russia thing, maybe we're on the right side, maybe we're not. I mean, has anybody gone to court? Has there been any, to your point, due process? And now the U.S. just seized Russian oligarchs' yachts. Did we go through a court and find out that they were involved in this or somehow complicit in this before we seize their property? There's that. And so just completely breaking the system down. But I want to dig in specifically to the piece you said about the nickel. So for those that aren't aware, nickel is a commodity. It's a mineral and it's shot through the roof, I think 250% up, and then they suspended it. Just explain what you mean about nickel and this GameStop moment.
Right. So the London Metals Exchange, the LME, which actually surprisingly happens to be owned by Chinese entities, it's the major clearinghouse for the futures on all the metals throughout the world, including, gold and silver. And, it turns out that a Chinese billionaire whose name I can't pronounce got heavily short the nickel market, and it started to move against him. Yeah. And it moved so far against him that he was facing a multi-billion-dollar margin call. Interestingly enough, JP Morgan held part of that. Yep. And so JP Morgan, who's very well connected, obviously, in the world, had a very strong interest in doing what they did. And they more or less did what they did with the Hunt brothers. They said, okay, nickel, you can no longer go long nickel. So anyone who was long nickel and had a huge gain, they lost it, were liquidation only. And they went further. They actually canceled trades. Going back to before where it was when it took off. And this is very much what they did in the Hunt brothers. The Hunt brothers had the silver market cornered. They would have broken the bullion banks. They would have split the system wide open. And yet they couldn't because the system changed the rules to screw them. and they subsequently ended up going bankrupt, which was,
Right.
I mean, it was tragic. But I mean, and I've seen this. I saw this personally. I was short stocks in 2008, financial stocks, and they changed the rules in September. They made what I was doing illegal.
Yeah.
Even though I had made the correct bet and I would have been up 50% that year, I ended up the year down 6% because they changed the rules in the middle of the game, which, is part of why it's just so obvious that the system is so broken.
Yeah. So it's interesting. When I saw that happen, it was almost like they sacrificed the integrity of the system to save the integrity of the system, right? So it's like, in order to save the whole market from crashing, they had to halt trading, right? They had to cancel people's orders, things like that, in order to keep it from crashing. But by doing that, they ruined the integrity of the system, or the trust that's in the system.
Right. You remember the famous quote from Vietnam, we had to destroy this village in order to save it.
Yeah. Something like that, right?
Like that, right.
Yeah. Now, to set this up a little bit better, you had talked about the system needs to be reset, right? We need to reset it. You had talked about, the currency needs to be reset. The currency is broken. And I think, there's a lot of talk we're at the end of this long-term debt cycle, 100-year sovereign debt bubble bursting, or
Right.
is this all just kind of indicative of what happens at the end of these long-term debt cycles?
I think so. I mean, I wasn't alive during the last one, right? So all I know is what I can read in the history books, but it seems to me that these patterns are, similar to ones that were seen in prior blow-ups. And, in fact, this weekend, I just reread Fiat Money Inflation in France, which is available on the web. It's on my Twitter feed, and it's available on the web for free. It's a great book. It's about 100 pages long. And yes, you can kind of see that what happens in these systems is, as they devolve, eventually you have to print more and more money to prevent them from collapsing. And and the printing of more and more money involves the issuance of more and more debt. And, I like to point to people say, well, why is it happening now? You've been saying this for 20 years, Larry. Why is it happening now? Well, I say because what happens is, in any parabolic function, they get very, things grow incredibly rapidly at the end. And, it took us, in the GFC of 2008, it took us, 3 or 4 years to print $3 trillion. I mean, we did it in 24 months. We printed 4 million in 24 months, this time around. And my sense is, in the next one, when, the bond market blows up, and of course, I don't know how much people are watching it. We're recording this on Monday, the 14th, but, the long bond is up almost 7% today to 2.14%. It looks, very explosive. And I think that, in the next one, the bond market's going to fail, because people are going to go, hang on a second, you're printing 7.9% inflation. You're telling me you're giving me a 2% yield. That's not going to work. Here, Fed, here are these bonds sold to you. And, the Fed knows that if the rates go too high, the entire economy is going to blow up. So the Fed's going to be forced to buy them and printing more. And that's where you get into this kind of vicious cycle that is really kind of a Gresham's law type cycle, where people who hold assets that are depreciating in value, bonds, sell them to buy assets that are going to go up in value, gold, silver, Bitcoin. Right. That's.
So you mentioned money printing and all the money printing that's happened and what that's been doing to the bond market. What I was going to say is our good mutual friend Greg Foss talks a lot about bonds, and he talks about how if the bonds are worthless, then the stocks are worthless. And so, I mean, if the bonds are going to be sold off, I mean, then you can only imagine what's going to happen to the stock market after that.
Yeah, I think that's right. I mean, although in a crack up boom, like a Venezuelan kind of situation, sometimes the stocks go up as well. I mean, if somebody forced me to pick between stocks and bonds, in a hyperinflation or high inflation environment, I pick stocks. And the reason is they represent a claim on a business that will get repriced and have value in the new currency on the other side. The bonds will become worthless.
Right.
In serious inflation, the bonds are going to zero.
So that's a really good point that you bring up for people that don't understand the nuance. So, I mean, there's really two ways that this can blow up. It can happen through a deflationary crash, which is everything crashes down to, very, small amounts, or we can have an inflationary crash where they just print so much money, things go to crazy new heights. Like we've seen in Weimar Republic or in Venezuela, to your point. But you said something about the massive amounts of money printing. There was a clip
from President Biden, or he was mad. Did you see that? He was mad.
I saw that. And he must really feel trapped. And I mean, they're getting scared. Marty Bent had a great tweet about this, about how scared they're getting, right?
So yeah, just for the audience that didn't see the clip. So President Biden is mad. He's been getting these questions, and he said, I forget the exact quote, but I don't want to say it again. The inflation is not because of our money printing. It's actually
he said government spending,
or government spending.
Admittedly, one step removed from money printing, but when you're running a huge deficit and the spending leads to a deficit, then the deficit leads to printing, and the printing leads to inflation. So for him to make that statement is incredibly disingenuous, and in my view, he was gaslighting all of us.
And then he went on to say that we're actually paying it down. It's reducing inflation and it's paying down the debt. He said he'll be the first president to reduce the deficit by more than $1 trillion.
Yeah, one, I don't think that's correct, but two, the other one that was kind of amazing was that that Nancy Pelosi said government spending actually reduces the deficit. I mean, the theory they're quoting there is the modern monetary theory that if they print money, it will get the economy going, and if they get the economy going, that will then help to reduce the debt, which is just it's bunk. It just is not true. But they've both been briefed. And it was very clear they've been briefed because they both gave more or less the same message. And
right.
I think they're trying to prepare everybody for the fact that, they're going to continue to print, and they have to. And by the way, the pain that's coming is going to be significantly large enough that there's going to be a clamoring for them to print. I mean, you've seen the $7.50 gas in LA.
Yeah.
And, think of how hurting, the average person in this country is going to be. And, they're trying to tee themselves up to do another stim package or more, more helicopter drops of money to people. Right.
Yeah. Well, I'm in Southern California. I'm in Orange County, the next county down. And so, yeah, I've definitely seen that. And what's some nuance for people that don't know. I mean, most of the unfortunate low income people don't live in LA. They work in LA. They don't live in LA, which means they live in the surrounding suburbs. And a lot of people typically drive over an hour each way every day. So now they're commuting, maybe it's 60 miles, each way. It's 100 miles a day, 150 miles a day they're driving, and they're low income earners. So not only do they have to have that drive, but now with gas going up to $7 a gallon, it's a huge proportion of their income.
Right. Yeah, no, it's absolutely tragic. I mean, I don't even know where to begin. I mean, think of how we discourage drilling, discourage pipelines, the whole ESG thing, Greta, et cetera. I mean, this didn't need to happen, but here we are.
Yeah. So, I mean, that's an interesting point. So, not to get into the politics of it, but I mean, unfortunately, politics is what drives it. So, really, it was in 2008 when we kind of had the fracking boom, and then the U.S. really started getting a lot amount of energy. Under President Trump, he pulled us out of the Paris Accord, which kind of really put this whole ESG kind of governance over the world, and really increased oil and gas. And then Biden's very first day in office, the very first thing, the very most important thing he had to do was sign executive orders to bypass all of the government to say, I am king, and I'm going to decree that we shut down the pipelines and we go back into the Paris Accord, which means we bow back down to the global ESG, standards and narratives and whatnot. So it was an executive order that was done. And of course, when you start telling, it was Biden's nominee pick for the OCC, Omarova.
Oh, yeah.
She said, we want oil companies to go bankrupt. That's what she said. So when you shut down pipelines, when you tell them there's no more permits, when you say we want you to go bankrupt, what do you expect is going to happen? People aren't going to invest into R&D and more drilling and whatnot.
Right.
And then on top of that, we've now benefited Russia, right, with commodities going higher. And now the Biden administration is now begging Venezuela and Iran to give us more oil. Even Iran, even at the risk of potentially letting them get their nuclear program back up, just so we can get oil from them, which the Chinese have already bought it all anyway. What is your take on why we would rather beg Venezuela and Iran and give them money, and instead of just increasing our supply here?
Well, I don't know. I mean, I can't get inside the head of the other side. I mean, it's just so wrong and so bad. I don't even want to start. I mean,
Is it so wrong and so bad that it must be intentional and not due to stupidity?
That's a tough one because they are stupid, but they also, I think have bad intent as well. So it's probably a mix of both.
Yeah.
It depends on which one you're looking at. Half this country just doesn't get it. I mean, we basically, without hydrocarbons, we don't have the lifestyle we have. So, we ought to figure out how to get more hydrocarbons, and we ought to work on clean energy for sure. I mean, imagine if the $6 trillion or the $8 trillion that we'd spent on all these wars in the Middle East had been spent on a comprehensive, national energy program where we were investing in, alternative sources, right? It would have been a lot smarter way to spend that money.
Yeah. The problem that I have with that is if we want to go heavily into wind and solar, which are intermittent supplies or unreliable supplies, then all the money just goes to China.
Well, some of it does. Yeah. I mean, certainly. And they don't solve the base load problem. I mean, frankly, we need to go into nuclear. I mean, it's sad that it's been demonized the way it has been because, done properly, it's probably, our best source of energy. Yeah. Although there are a lot of other sources as well. I mean, the problem, Mark, in my view, is that when you start messing with the money and you mess with the price signals, nobody knows what makes sense. I mean,
that's exactly right.
Some of that fracking wasn't economic, but it was done because the cost of capital was zero. You got to get your capital cost right. And then business people will, just for the beauty of free markets, say, okay, this returns more than my cost of capital. It's a worthwhile project. I'll do it.
Right.
Or this does not return the cost of capital. I'm not going to do that. And that's why messing with the money, messing with the price signals makes us all poorer. We have destroyed wealth and we are destroying our living standards to maintain a monetary system that's horrifically broken.
Right.
And so everyone says, well, you're rooting for a collapse. Yeah, I am, because I've got a limited lifespan. I mean, I'm 64 years old. I know it's broken. I know it's going to collapse. I want to get to the other side so that our kids and grandkids will have decent lives. And the longer we hang on to this broken system, the more we all suffer. Yeah. So, in the process of changing it, will it be ugly? Yeah, it's going to be ugly. I mean, let's not kid ourselves. It's going to be tough. But, let's fix it and get to the other side. Because if you look at countries that have had this problem, and you look at hyperinflations or other high inflationary periods, when they return to sound money, prosperity returns. It does. Mm-hmm. People will do the right things. The market incentives work.
Right.
But unfortunately, we keep, the people, a lot of our leaders keep fighting it because they have a lot of privilege and they get paid very well. Thank you very much. In this broken system. It works well for them. Yeah. It doesn't work well for the rest of us. It doesn't work well for the guy who's got to pay $7 to commute to his job in LA. But
it's unfortunate.
But the people at the top, I mean, Nancy Pelosi just bought a $20 million house in Florida. She's doing fine.
Yeah. I saw you've been leaving some comments on Twitter on our mutual buddy Santiago Capital or Brent Johnson, who, by the way, Brent is a good buddy. We spent a lot of time in Puerto Rico together. He spoke at the Market Disruptors event last year. And of course, just a shout out, Lawrence will be speaking at Market Disruptors live coming up here in a couple months, 2022. But, he's been talking about, he has this milkshake theory about the dollar sucking all the liquidity out of the world. And he looks to be a little bit vindicated right now in a sense where the dollar seems to be getting extremely high because I guess there's a big dollar shortage everywhere. Everyone's rushing to the dollar. But I think there's nuance there because the dollar getting stronger against other currencies doesn't mean the dollar's getting stronger against commodities or real things. Is that how you see it?
That's how I see it. I mean, I like Brent a lot. He's a good guy. I think he's a gentleman. And we've had a gentlemanly disagreement. I mean, he's focused on the dollar versus other forms of fiat, and he's right. It is the best of a bunch of broken systems, but yes, I view it as that's not really the cross or the price that matters. I mean, is the dollar better than the euro? Sure. Is it better than the yen? Sure. Whatever. I view
yeah, whatever.
whatever. I mean, I view what matters to me is the dollar against what I consider to be real money, which is gold and or emerging real money, Bitcoin.
Yeah.
So, that's what really matters. And if you look at the balance sheet and the income statement of the United States, which at the end of the day, I mean, the dollar is the reserve currency for historical reasons and because of so many transactions were done in it. And of course, we have all the men with the guns and so on and so forth. There are all kinds of reasons why it's the reserve currency, but we've abused that privilege, badly. And you look at our income statement, you look at our balance sheet, and, the U.S. is bankrupt. I mean, that's hard for people to admit, but it's true. We've got 200 trillion of off-balance sheet liabilities, and we're running deficits of, arguably $2-3 trillion a year. And I don't see that changing anytime soon. And so, that being the case, mark to market, the dollar compared to stuff is going to fall remarkably hard, in my opinion, in the next couple of years.
Yeah.
Now, the dollar compared to other fiat, I don't know. I don't really know. I mean, so I think Brett can be right in his, better than other fiat thesis, and you and I can be right in the dollar has got real problems against commodities and sound money.
Yeah. And I mean, money is only a medium of exchange for exchanging goods. Money isn't wealth, right? Money allows us to measure how much wealth we can get or buy wealth, and wealth is goods and services. So really, if you think about it, the dollar may be gaining steam against other fiat currencies, but it only counts in is how much it can buy of actual goods and services.
That's exactly right. I mean, well, there's several uses, right? There's the transactional value of money. I mean, the dollar's fine if you're going to get some dollars and spend some dollars. It's probably the best thing to have because it's super liquid and everyone takes them, and it's easy to use. But the store of value is also an important property of money. And if you look at the fiat, history of the U.S. dollar, there's a chart that I love to show that Stuart Thompson puts up that shows, in gold terms, and now in Bitcoin terms as well, the dollar has consistently lost value since 1971, a lot of value. Like 90 some odd % of its value. And, I think the remaining piece is probably going to disappear in the next 5 or 10 years, maybe sooner. So,
yeah. I've been kind of like you, going back to kind of what you said about like, let's just get this over with, over the last, several years. I'm like, no, you can't do this. No, you can't print that much money. Like, and now I'm just kind of like, oh, let's just get the party over with here at this point. Right.
Well, yeah, I mean, if you recognize it for what it is, that it's broken, and you recognize that there is a better solution, then my view is, let's get on with it. Some people have used the analogy, let's rip the Band-Aid off,
Right.
Let's just rip it off and start anew. Yeah.
Now, there was a paper that made a lot of news. I'm sure you heard about it. It was Zoltan from Credit Suisse's paper, and it was a pretty insightful way to look at things. And I've been caught up in this. The IMF, Kristalina Georgina, she called out for a Bretton Woods II moment, and so Bretton Woods I happened in 1944. We have about an 80-year financial revolution cycle, and so maybe that happened about 80 years ago. Now Bretton Woods II, which is a new global financial system. He said that maybe we're actually going into a Bretton Woods III, and he said that if Bretton Woods I from 1944 to 1971 was a commodity-based money based on gold being a commodity. 1971, Nixon taking us off the gold standard, we went into the age of fiat or treasury money. And now maybe the world is pivoting back into a commodity money.
Yeah, I read his paper, and I think he's brilliant in all respects. And the thing I disagree with him on, he doesn't understand Bitcoin yet. I think it's just because he's in the legacy financial system and he hasn't taken the time. But so and technically too, you're correct. I mean, from 71 to present, we were on a fiat standard, but really, and Lucas pointed this out so clearly, really we were on a petrodollar standard. The reason that the dollar did hang together, one, Volcker kind of went in and protected it in 1980. And then, the deal we made with the Saudis, where the Saudis would only the Middle East would only accept dollars in exchange for gold, meant there was always a bid for dollars, for oil. There was always a bid for dollars to buy oil. So we've been on the petrodollar standard. And as Luke pointed out in his great interview this last weekend with Grant Williams, we've kind of broken out of the range that existed for a long period of time. And in oil terms, the dollar is sliding hard now. And, I do think we need a Bretton III moment. I mean, Zoltan's right about that, and he talks about inside money and outside money. He had the same reaction you and I have to the seizing of the reserves, which is, oh my God, if a country can seize somebody else's sovereign reserves, what are these monies anyway? We need the bottom line here, Mark, and you know this, I know this, is we need a neutral reserve currency worldwide. It would be fair to all parties. Now, it wouldn't, it might hurt the US on a relative basis somewhat, because frankly, we've lived beyond our means as a result of having this reserve currency.
Right.
But, look at the cost, right?
Right.
The cost is massive inflation. And so, I look, before we get into the hyperinflation, all the bad things that could happen. Yes, if we had really enlightened people running this country or running all these countries, they would get together and say, you know what, we've really screwed this thing up. We need to do a reset. Yeah. And we're going to create a bancor. We're going to create a neutral reserve currency. And it could be a lot of different things. It could be gold. It could be Bitcoin. It could be a basket of commodities. It could be a combination of all of the above. But we need to create a currency that's neutral, that everyone agrees is the currency that countries settle with each other in. And then these imbalances won't take place, and you won't have people like France calling our bluff in 71, or people like Putin calling our bluff now. Mm-hmm. You'll have the prices of everything worldwide will balance out, and resources will get allocated correctly, and we will all have much, much higher standard of living. So that's the thing. Everybody sees this as just, it's all bad. It's all bad. There's a lot of negativity around this. I'm telling you, and this is what I love about Bitcoiners, there's a positive on the other side of this.
Sure. A lot of it.
Bitcoin fixes this. If we got to a strong neutral reserve currency and people knew they could save in something that wasn't being depreciated, where they weren't being stolen from, their lives would be much, much, much better. And so that's why, in my opinion, this is really the fight of our lives. This is, this fourth turning, and I think we're going to win it. But, I'd rather win it sooner, so that I get more years in the good system rather than later. Mm-hmm. So that, if this drags on, every year that it drags on, more and more people get hurt, right? There are more and more people driving to work and paying $7 for gas. And it's wrong. It's broken. So let's fix it, right?
Yeah, exactly. I think, the biggest, probably the ones that would feel the pain the most would be, the recipients of the government spending, right? So right. The government would lose the ability to just go create an extra $1 trillion at will. And so the beneficiaries of that extra $1 trillion would be the ones hit the most. You and I don't get any benefit from that. And ultimately, even the people that are getting the UBI, they're getting $1,000 a month. Even them, they only get a small pittance, really. $1.5 trillion gets dedicated, and maybe a couple percent of that actually go to the people. Right. So most of it is just these like wasteful spending programs anyway. So I don't know how much the pain would actually be. It's hard. I guess we could do the math.
Yeah, well, unfortunately it gets distributed unevenly too, right? If if we do a currency reset and you're 30 years old and you've got 40 years of earnings power in front of you in a fair system, okay, so maybe your existing savings, aren't worth as much, but you got a lot of earnings power ahead. What's very sad about it, we do this reset and somebody's 70 living on a fixed income. You can almost be sure that if and when the reset occurs, that, people who have wealth in the things like bonds, they're going to be hurt. And, if you're young, you've got the ability to recover. If you're old, you don't. So, they're going to be winners and losers in this. There's no doubt about it. And that's sad, but it is what it is. And that's why we try to protect people and to tell people what they need to do to protect themselves from these depreciating currencies, right?
Right. Now, it looks like gold has been a very big beneficiary of this, surprisingly. I think both of us, you spend a lot more time looking at gold than I do, but I think it was surprising for the last year going, what the heck is going on with gold? Like, if not now, when, kind of a thing. Yeah. Even though we saw really, and actually, as Zoltan kind of pointed out, and I went back and looked at the charts, in 2008, is when the central banks became net buyers of gold.
Yes.
Right. And so since then, and over the last couple of years, they've been buying more gold than any time in history since 1971. So it seems like gold has been the big beneficiary of this. And it looks like there's been we're maybe on the verge of having some sort of a gold shortage, right? Maybe like it's just going to take one delivery to fall short. I mean, what are your thoughts on that?
Well, it's possible. I mean, a lot of people have asked me, is gold going to do a nickel? Gold or silver going to do a nickel? And it's entirely possible that that happens, but they're pretty big and deep markets. I don't think that happens, but I do think they're going to break out from the ranges and go much higher. And, it's interesting to me the way these two sound money assets kind of are uncorrelated. And one of the things I've done in my fund is we own both of them. And, when gold is expensive, I sell some and buy some Bitcoin. And, when Bitcoin is expensive, I sell some and buy some gold. And, one appears to be a little bit more of a risk on asset, that's Bitcoin, and one is a little more of a risk off asset, but they're both going up compared to fiat. And, I think when gold had a top of 1900 in 2011, and then it went through in 2020, it went up to 2065 roughly, I think on a closing basis. And it touched that again recently. And there's really no such thing as a triple top. So, I'm with Michael Oliver. I think when this thing breaks through the 2100 level, it's going to take off like a scalded dog. I mean, this thing is, I think the next run in gold is 2,700, 3,000, something like that. And then it'll check back. And then probably Bitcoin will come and do a catch up and even outperform that. I mean, I don't think there's any doubt that Bitcoin is going to outperform gold. And the reason for that is that, Bitcoin's got they're both sound money and they're both going up because fiat's going down. That's really what's happening. Right. Fiat's going down in value. Gold and Bitcoin are going up in value. The difference between the two is that gold is, huge Lindy effect, 5,000 years, pretty well distributed, and Bitcoin is small and emerging. So Bitcoin's on one of those adoption curves where, we just hit the tipping point of over 10% of the people have it. And right. As tipping point theory says, the time it took you to get there takes you to go to 90%. So it took us 12 years to get here. In another 12 years, 90% of the world's going to own Bitcoin, in my view.
By 2029, the end of the decade.
Yeah, and for that to happen, because the supply is limited, the price of Bitcoin is going to go to the moon. So, right. I fully expect to see Bitcoin in the hundreds of thousands and millions per coin, and I expect to see gold at 10,000 as well. But, that's a 5-bagger for gold, $1 million for Bitcoin. I mean, what is that? That's like a 40-bagger. So, right. And that's because of the adoption curve, right? That's
I know you love your gold miners. They'll probably do pretty good.
They'll do well too. Yeah, they've got a lot of operating leverage. But having said that, it's a pretty tough business. I mean, they've got two challenges. One, they're breaking rocks, and that's just difficult because you just never know what you're going to get in terms of geology. And it's like the oil business. Once you've mined it, it's gone. You got to go find more. So it's not a great business, but it can become a great business during periods where the price is accelerating because, the cost to mine an ounce is about $1,200. The price is around $2,000 a day. I mean, the price can go to $3,000 and the costs will go up because oil and inputs are going to go up, but not nearly as fast. And so the margins just blow out. And, and then the multiples right now are pretty low. I mean, a lot of my stuff trades at 3 to 5x cash flow. In a real bull market, this stuff will trade at 10 to 20x cash flow. So you're going to get multiple expansion and you're going to get higher gold prices. I mean, the two, it's like rocket fuel. I mean, I do think I own a lot of stuff that'll be 10-baggers, but it's going to take those things to happen.
Yeah. So for the average person that's kind of watching and listening to this, what are the things that they should be watching or paying attention? I think, the old problem was that we had getting access to information was difficult. Today we have access to too much information, right. And you have to learn how to kind of discern through that. What are the couple things that you're watching that maybe the average person could just kind of keep an eye on?
Well, I'd listen to the smart analysts, like yourself and Luke Groman and others.
Which, by the way, Luke Groman's also going to be speaking at Market Disruptors Live, by the way. So, but yeah, keep going.
In my opinion, he is by far the best macro analyst in the world right now, and
he's been spot on.
Yeah, he's been so dead right about so many things. I watch the 10-year yield very, very carefully in the bond market. I watch the stock market very, very carefully because there's signals there. To me, probably the bond market is the biggest tell. I mean, what's going to happen, in my opinion, is this inflation is going to continue. It's going to be much higher than people think, and it's going to persist. And the bond guys, I mean, I've recently watched some things with Lacey Hunt, and they're still driving through the rearview mirror. I mean, they think we got deflation coming back. I mean, the 3 to 5 to 10 year bond swaps are still showing, future inflation swaps are still showing 3%. I mean, everyone thinks we're going back to 3%. That's not going to happen. There's just no way, in my opinion, that happens in any kind of reasonable time frame. So as the inflation continues to build, more and more people are going to say, gosh, bonds? I don't think so. I'm out of here. Sell that.
Mm-hmm.
And then what happens is, okay, the Federal Reserve is going to look at it and say, well, rates are really going up rapidly. That's going to kill the economy. We can't have that happen. We need to buy those bonds. Well, how do they buy those bonds? They print money to do it. Well, printing money is what got us into the inflation problem to begin with. And so you get a doom loop, right?
Mm-hmm.
Where the worse it gets, the higher the interest rates go, the more the bond market sells off, the more the yield curve control, and the Fed has to come in and buy it. Their balance sheet goes bigger. I mean, I think the Fed balance sheet, which is, what is it, 8 trillion today, roughly, maybe 10 more. I think that's going to, 15, 20, 30. I mean, and eventually, Mark, everyone's going to lose faith in the Fed. I mean, I did a thread on this that was a week or two old where I just kind of, laid out a scenario where eventually, most people are familiar with Gresham's law, which says if you hold money that is programmed to lose value, eventually you say, everyone wants to defend their own financial well-being, right?
Right.
And if what you own is going down in value and going down quickly, people are going to say, get me out of here. Get me into something that will preserve value. Yeah. And, gold and Bitcoin are the two most obvious choices. And so frankly, the price of gold and Bitcoin are probably the other two big indicators. I mean, when Bitcoin takes out 69,000, which it will, and when gold takes out 2,000, which it will, you'll know it's game on for the next run.
Yeah. You mentioned earlier the crack up boom, which Ludwig von Mises came out with about 100 years ago. And it says, and then suddenly the people wake up and they realize that inflation is both persistent and intentional.
Right. Well, exactly. And they realize there's no way to reverse it. And that's where the reading of the history of prior hyperinflations is very helpful, because what you see, what Pelosi's doing, what Biden's doing, what you see is they're trapped. They know, they're faced with a decision. Do we continue to print money, send it to people? Weren't you surprised by how quickly this $1.6 trillion spending bill went through?
Just out of nowhere.
Out of nowhere. Yeah. Like in days, they just put it together, passed it, put all kinds of pork into it. It's bam, and the CBOE.
There should be a law against passing bills that fast.
Yeah, right. And the CBOE was saying, well, we're going to go back down to deficits of 1.5. There's no way. We're going to run $2 trillion deficits. Then we're going to run 3. Then we're going to run 4. And so as it becomes more obvious that these things are just, there's no way to stop this runaway train. What would be the way to stop the runaway train? It would be to push, to do a Volcker, right? To push interest rates up extremely high and to cut government spending way back. Mm-hmm. But do you think there's any appetite for that? No. The answer is no, right?
Yeah.
There's just no appetite, because that, and by the way, that would make the Great Depression look like a cakewalk, right? Because everything would be failing. And so, politicians, when presented with the, blow it all up and create a Great Depression, or print and, keep kicking the can down the road, kind of hoping that the inflation will go away, they're going to always pick number 2. Yeah. And the thing is, the inflation isn't going to go away because what they're doing makes it worse.
Yeah.
That's the point. Yeah.
Yeah. I want to, I know we've gotten kind of long. We're going to transition this off and close it off. But before we do, let's end on a little positive note. Because obviously it's easy to see all the bad stuff that's going on in the world today. And it's bad. No sugarcoating it. Unfortunately, it's only going to get worse, in my opinion. That being said, I think both of us are actually extremely hopeful. We're not doom and gloomers.
Absolutely.
So what's the hope? You're hopeful. You're not a doom and gloomer. So what's the hope here?
Well, I point to one thing I think is a very big positive. Obviously it's because they've shifted the narrative, but isn't it fun and interesting and positive the way the COVID narrative has really died down?
Yeah, I saw a joke, satire, and it said Putin should be nominated for a Nobel Prize because for 2 years he couldn't beat COVID and he got rid of it in 3 days.
Exactly, right? So that's a positive, and it appears to be coming to be recognized as just a bad cold, and so that whole, and that 2 years of lockdowns and all kinds of bullshit that we endured, that appears to be going away. I think the biggest positive, Mark, frankly, is the internet and people like you and, other people who are spreading the word, and the fact that more and more people are getting orange pill, more and more people are becoming aware. And, and unfortunately, it takes $7 gas to make people become aware, but so be it. That's the way it works. And so people start to feel pain. It's like you hit them upside the head with a 2x4 and they wake up and go, holy shit, this isn't right. And then they start to educate themselves. Right. And to me, that's really the biggest positive, that I now feel like, and this country is full of great people, the smart people, and they will over time learn. And, the system will get reformed. I mean, I'm hopeful that, all incumbents will get thrown out of office. I mean, as this gets worse and worse, we're going to end up with Suarez, the mayor of Miami, who's a Bitcoiner, as the president, right?
Wow, that's a big prediction.
Yeah, I believe it. I really believe it. And so I guess, my positive view of it all is that, we can all communicate. The other positive thing about it is we've got them badly outnumbered. I mean, yeah, the elites have a lot of levers and they've got a lot of crooked narratives, but you know what? We're killing them. I mean, look at the success of Joe Rogan as compared to the traditional networks. He's crushing them, right?
Yeah,
I mean,
super bullish.
Their bullshit is so obvious.
Yeah,
and so many people are seeing it now. So to me, that's a huge positive, right?
Yeah. Yeah, I would agree. I mean, we both agree that having a sound money system could bring back human flourishment, could bring back,
absolutely
everything. And so we need to get back to that. The problem is this old system has to be reset, and it has to be. There's no choice. We're at the end. I mean, how much longer can they get it? So it's like if we can just get past this bad part, then we can start on the good part again.
Exactly, and that's a very positive message. I mean, I think, the Marty Bent generation, I think you're a little older than he is. I mean, these young millennials, they get it. And these guys are going to be heroes. I mean, they're going to push, they're not going to put up with this bullshit. And it's going to get fixed. I mean, I really am extremely optimistic that it's going to get fixed. I view my role in it all is to try and pass on the knowledge, because I've been fighting this battle for 20 plus years, pass on the knowledge I have to people to try to protect themselves. And I work really hard to orange pill everybody I know. I work really hard to try and point out the necessity of having sound money like gold and silver and, for your savings. And, I encourage people to protect themselves because, yes, this thing will be bad, but on the other side of it, it will be good. And those who protected themselves will come through it better. So.
Exactly. Yeah. I was at a conference 2 weeks ago in Vegas. It was Tone Vay's Unconfiscatable. I was sitting down with NVK and he said, we just kind of have to be like a cockroach. Just don't die. Just get from here to there, right? On the other side of that, with our wealth intact, right?
Yeah, we're not going to die. I mean, they're going to try some bad stuff though, but once again,
well, I didn't mean physically die, but
I know.
Financially, right? Keep our
yeah. No, that's right. We got to keep our powder dry, and that's. But I think everybody who owns any Bitcoin is going to be just fine. Yeah, absolutely. I mean, my only, what I always say there is the only wrong allocation is zero. Yeah. One coin is going to make huge difference for everybody. Yeah. So, and most people, if they work hard and save, and so on and so forth, they can get to the point where they have one coin. So
yeah. Yep. Everyone can get to that point. So, all right, good stuff. Well, I know we've gone for a long time, so go ahead and wrap it up there. You are going to be speaking at the Market Disruptors Live 2022 coming up here in a couple months. There's a link down below for anybody that wants to check that out. Hoping that you'll give us a little bit more insight on this transition, what's going to happen and what people should be doing about making that transition so we get to the other side on that. Yeah. And other than that, I know you've been putting out a ton of good stuff on Twitter. Like you said, you put out a thread the other day that I think was super insightful. And I know you kind of also run your fund. Is there anything you want to bring attention to that people could look at?
No, nothing in particular. I would just encourage people to self-educate and then spread the word. I think that, everybody who wants to see things get better, work to make them better. Everyone knows 20 people. And if you spread the word, then they spread the word, and we get to the point where it's going to be just massive. And these people who are doing us wrong, we're not going to let them do us wrong anymore. We're going to, because the people of this country are good, and once they understand it, what I find frustrating is that a lot of people don't understand it.
Right,
it's complicated, and they've been snowed, and so people have to take the time to understand it. Once you understand it, you see it. And then if you can help others see it, suddenly we're a voting bloc, and we're gonna be able to fix it. That's how I see it.
Yeah, exactly. That's why I have this picture in the background here, lighting brush fires, and it's from the Samuel Adams quote. It's just it doesn't take a majority; it just takes a minority of men to keep lighting brush fires in the minds of men.
Yep. So I think that's right, and it's going to happen. Like I say, I'm very, very optimistic about it. Really am.
Yeah. Awesome. Well, Lawrence, pleasure speaking to you as always.
Likewise.
I can't wait to see you, hang out with you in person here very shortly.
That'll be fun. Yeah.
And are you also going to be at Bitcoin conference?
Yeah, I'm going to be in Miami. You going to be in Miami?
Oh, yeah.
Yeah, I'll see you there.
So I'll definitely see you there. With that, we'll go ahead and sign it off. Thanks so much for joining me today.
Okay, likewise. Take care.
All right, what a great interview with Lawrence. I really enjoyed it. Hopefully you enjoyed the conversation as well. Now, we didn't talk about what he thinks is going to happen over the next couple of years. We talked about the hope on the other side, but how do we navigate the next couple of years to build, grow, and protect our wealth? And that's exactly what Lawrence is going to come and answer for us at the Market Disruptors Live 2022. There's a link down below. Come hang out with me, about 15 of the best speakers in the world that will answer those two questions: what's going to happen and what you should be doing about it. Come meet them, talk to them, ask them your questions, meet some new friends, hang out with me. There's a link down below, marketdisruptorslive.com. I hope to see you there.